Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the price fluctuating within a range, but generally moving higher. The forecast price further strengthens this bullish outlook, projecting continued price appreciation over the coming weeks. Therefore, the recommended investment strategy is to enter a long position at the current price of $101,000. A stop-loss order should be placed at $97,200 to limit potential downside risk. The target price for this investment is $105,000, aiming to capitalize on the projected price increase. This strategy capitalizes on the bullish momentum and long-term growth potential of Bitcoin. Based on the provided price history and forecast for Bitcoin Cash, a short-term investment strategy appears promising. The historical price data reveals a recent consolidation phase, with prices fluctuating around the $540 mark. The forecast suggests a slight upward movement towards $574 in the coming days. Considering the support price at $516 and the resistance at $538.80, this upward movement is likely to be limited. Therefore, I recommend a long position with an entry price around $540. The stop loss should be set at $532 to minimize potential losses if the price dips below the recent consolidation range. The target price could be set at $570, aiming to capitalize on the forecast's upward momentum while staying within the projected price range. This strategy allows for a balanced approach, aiming for moderate returns within a short time frame while managing risk effectively. Based on the provided information for stacks, a short-term investment strategy appears most suitable. The historical price data shows a recent dip, and while the forecast indicates a slight upward movement, it remains relatively flat. The current price sits close to the support level, suggesting potential for a short-term bounce. However, the resistance level is relatively close, indicating limited upside potential. Therefore, an aggressive short-term strategy could involve entering a short position at the current price of approximately $2.31. A stop loss could be placed slightly above the current price, around $2.35, to minimize risk. The target price could be set at $2.18, aiming to capitalize on a potential pullback towards the support level. This strategy leverages the potential for a short-term price correction while mitigating risk with a tight stop loss. Based on the provided Ethereum price data, a medium-term investment strategy appears most suitable. The historical prices demonstrate a volatile but generally upward trend, with recent fluctuations suggesting a potential consolidation period. The forecast indicates a continued upward movement, with prices projected to reach around $4,070. However, the resistance level at $3,907.56 suggests that the price might encounter some resistance before achieving this target. Therefore, a long position is recommended for a medium-term investment. An entry price around $3,880, slightly below the current price, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $3,620, the support price, to limit potential losses. The target price can be set at $4,050, aligning with the forecast and providing a reasonable profit margin. This strategy aims to capitalize on the expected upward momentum while mitigating risk through a well-defined stop loss and a realistic profit target. Given the 2-week price change and 1-week forecast for Ripple, a short-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating trend, but the forecast suggests an upward movement towards the resistance level. Taking advantage of this potential upward momentum, a long position is recommended. An ideal entry price for this strategy would be around $2.42, aligning with the recent price action and the support level. The stop loss should be set at $2.35 to minimize potential losses if the price drops unexpectedly. The target price should be set at $2.72, aiming to capture the potential upside movement predicted by the forecast. This strategy allows for a relatively quick turnaround while capitalizing on the anticipated price increase. Given the price trends and forecast for Binance Coin, a medium-term investment strategy appears to be most suitable. The historical prices show a general upward trend, with recent fluctuations around the $700 mark. The forecast suggests a continuation of this upward momentum, with prices potentially reaching the 740s. However, the resistance at $717.97 indicates potential for consolidation or a brief pullback before further upward movement. Therefore, a long position is recommended to capitalize on the anticipated price increase. A suitable entry price would be around $705, aligning with the current price and recent dips. The stop loss should be placed slightly below the recent support level of $676.79 for risk management. The target price could be set at $740, aiming to capture a significant portion of the predicted upward movement. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. The provided data for Stellar suggests a short-term bearish outlook. While the historical price shows some fluctuations, the 2-week price change indicates a downward trend. The forecast price also projects a continued decline over the next week. Considering these factors, a short position appears to be the most suitable strategy for Stellar. To execute this strategy, we can enter a short position at the current price of around $0.435. The stop loss should be set at $0.471, the resistance price, to limit potential losses if the price unexpectedly rises. The target price can be set at $0.409, the recent low in the historical price, allowing for a reasonable profit margin while capitalizing on the anticipated downward movement. This strategy aims to capitalize on the short-term bearish trend in Stellar. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with a slight downward bias, while the forecast suggests a continued decline in the coming week. The support price is at $5.777, which acts as a potential floor for the price. However, the resistance is at $6.352, indicating that the upward momentum is weak. Considering this scenario, a short position is advisable to capitalize on the anticipated price decline. A suitable entry price for a short position would be around $6.25, aligning with the recent price action and the forecasted downward trend. The stop loss should be set at $6.38 to protect against any unexpected price surge. The target price should be set at $5.85, allowing for a reasonable profit margin before reaching the support level. This strategy aims to capitalize on the short-term bearish momentum of Toncoin while managing risk effectively. Given the provided historical price data and forecast for Cardano, a medium-term investment strategy appears most suitable. The historical price shows a fluctuating trend with periods of both upward and downward movement. The forecast indicates a potential for upward movement in the coming weeks, reaching prices around $1.25. However, the recent price dip suggests a period of consolidation before a potential breakout. Therefore, a long position is recommended with an entry price around $1.15, slightly below the current price. This allows for a margin of safety in case of a minor pullback. The stop loss should be set at $1.06, the lowest point in the recent price dip, to protect against significant downside risk. The target price can be set at $1.25, aligning with the highest forecast price, allowing for a potential profit of around 8%. This strategy balances risk and reward, aiming to capitalize on the potential upside while mitigating potential losses. Given the historical price data and the forecast for Litecoin, a medium-term investment strategy appears most suitable. The price history shows a recent dip followed by a potential upward trend, aligning with the forecast which predicts a gradual increase over the next week. The support price at $99.37 suggests a strong base for potential price recovery, while the resistance at $136.06 indicates a ceiling for the immediate upward movement. Therefore, a long position is recommended to capitalize on the anticipated price increase. An entry price of $120, slightly above the current price and below the resistance level, would allow for a favorable risk-reward ratio. The stop loss should be set at $115, below the recent dip and the support price, to minimize potential losses. The target price can be set at $135, aiming to capture a significant portion of the predicted upward movement before encountering the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in the medium term. Given the provided price history and forecast for Doge-Coin, a bullish investment strategy is recommended. The price history shows a consistent upward trend with recent price increases. The forecast indicates further upward movement, suggesting a positive outlook for Doge-Coin in the short to medium term. Therefore, a long position is advisable with an entry price around $4.45, aligning with the recent price action and below the current resistance level. The stop loss should be placed at $4.261, the support price, to limit potential losses. The target price can be set at $4.96, the highest forecasted price, allowing for potential profit capture. This strategy capitalizes on the anticipated upward momentum while managing risk through a well-defined stop loss. Based on the provided Aptos price data, a short-term investment strategy appears promising. The historical price shows a slight upward trend, but the forecast predicts a continued increase, suggesting potential for capital appreciation. The support price of $12.70 acts as a safety net, while the resistance price of $13.62 indicates a potential ceiling for short-term gains. Therefore, a long position is recommended for this strategy. An entry price near the current market price, around $13, would allow you to capitalize on the anticipated upward movement. A stop loss should be placed slightly below the support price, around $12.50, to minimize potential losses. The target price should be set at $13.80, aiming to capture a significant portion of the predicted price increase. This strategy allows for a balanced approach, maximizing potential profits while mitigating risk. The provided data for SE suggests a potential opportunity for a short-term investment strategy. While the historical price data exhibits some volatility, the recent 2-week price change shows a downward trend. Furthermore, the forecast predicts a continued decline in price over the next week. Considering the support price of 55 cents and the resistance price of $0.6743, a short position appears to be more advantageous. Therefore, a suitable investment strategy would involve entering a short position at the current market price, which is slightly above the support level. A stop-loss order should be placed at 60 cents, above the entry price, to limit potential losses. The target price for this short position could be set at 57 cents, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish outlook and aims to generate profits from the potential price drop. Given the price trends and forecast for Ethereum Classic, a moderate risk investment strategy would focus on a short to medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a slight downward trend over the past 2 weeks, but the forecast indicates a potential rebound with prices projected to rise towards the resistance level. The support price of $20.41 provides a safety net, while the resistance price of $34.06 suggests that there is room for further growth. Therefore, a long position is advisable to capitalize on this potential. An entry price of $32.50, slightly above the current price and below the resistance level, allows for a potential profit while minimizing risk. The stop loss should be set at $30, below the recent lows, to protect against unexpected price drops. The target price could be set at $34, aligning with the resistance level and offering a reasonable profit margin. This strategy balances risk and reward, aiming to capture a portion of the potential upward movement in Ethereum Classic over the next few weeks. Given the historical price data and the 1-week forecast for Polygon, a medium-term investment strategy appears most suitable. While the historical prices demonstrate a volatile trend, the forecast suggests a potential upward movement towards the resistance level. The entry price for this strategy should be set at $0.623, aligning with the recent price dip and offering a favorable entry point. The stop loss should be placed at $0.581, just below the recent support level, to minimize potential losses in case of a sudden price decline. The target price for this strategy is set at $0.693, which aligns with the forecast and represents a reasonable profit target. This strategy aims to capitalize on the potential upward momentum in Polygon while managing risk through a well-defined stop loss. By investing in the medium term, we allow for price fluctuations to potentially play out in our favor, increasing the likelihood of reaching the target price. The chosen entry and exit points are based on a careful analysis of historical price data and the provided forecast, aiming to maximize potential returns while minimizing risk. Given the provided price history and forecast for AEVO, a cautious investment strategy with a medium-term perspective appears most suitable. While the recent price history shows some volatility, the overall trend has been upward. The forecast also indicates a potential upward movement in the coming week. However, the price is currently near its resistance level, suggesting a potential for consolidation or a short-term pullback. Therefore, a long position is recommended with an entry price around $0.516. This allows for entry at a relatively low point, potentially capturing any upward momentum. The stop loss should be set at $0.482, below the recent lows, to limit potential downside risk. The target price can be set at $0.626, aiming to capture the previous high and potentially benefit from further upward movement. This strategy balances risk and reward, allowing for potential profits while mitigating the risk of significant losses. Based on the provided information for optimism, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent fluctuations suggesting potential volatility. While the forecast price indicates an upward movement, the relatively short timeframe of 2 weeks suggests that this trend may be subject to change. Additionally, the support price of $1.838 and the resistance price of $2.569 provide a defined range within which the price is likely to move. Therefore, a long position is recommended for this strategy. An entry price around $2.50 would allow you to capitalize on the potential upward movement predicted by the forecast. A stop loss at $2.45 would protect against unexpected price drops, while a target price of $2.65 would aim to capture a significant portion of the potential gains before the price potentially reaches resistance. This approach allows for a balanced risk-reward profile, aiming to profit from the short-term bullish momentum while mitigating potential losses. The provided data for STRK suggests a cautious approach to investment. While the historical price shows fluctuations, the recent downward trend and the forecast indicating further decline point towards a bearish outlook in the short term. The support price at $0.6163 and resistance at $0.6613 further emphasize this bearish sentiment. Therefore, a short-term investment strategy focusing on a short position appears more suitable. An entry price around $0.655, near the resistance level, allows for potential profit if the price drops towards the support level. A stop loss should be placed at $0.6613 to limit potential losses in case the price unexpectedly rises. The target price could be set at $0.6163, the support level, aiming to capture the anticipated decline. This strategy prioritizes risk management and capitalizes on the potential short-term downward movement of STRK. Given the price trends and forecast for Solana, a medium-term investment strategy appears most suitable. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating a continued but gradual decline. While the price is currently near its support level of $213.67, the resistance level of $227.25 suggests limited upside potential in the near term. Therefore, a short position is recommended for a medium-term investment strategy. An entry price of $225, aligning with the recent price action, would be appropriate. A stop loss should be set at $229 to protect against potential upward price movements. The target price could be set at $215, anticipating a moderate decline towards the support level. This strategy aims to capitalize on the anticipated downward momentum while managing risk effectively. Based on the provided price information for Jupiter, a cautious investment strategy is recommended for the medium term. The historical price data shows volatility, with a recent dip below the support price of $1.0505. While the forecast price suggests a potential rebound, reaching the resistance level of $1.1889 seems unlikely in the short term. Therefore, waiting for a clearer upward trend or a more significant price break above the resistance level before entering a long position is advisable. A potential entry point could be around $1.10, above the recent lows and near the support level. Setting a stop loss at $1.06, slightly below the support price, would limit potential losses. The target price could be set at $1.18, aiming to capture a portion of the potential upward movement towards the resistance level. This strategy allows for capital preservation while offering a reasonable chance of profit if the price trends upwards as forecasted. Based on the provided price history and forecast for Render, a short-term investment strategy appears promising. The historical data shows a fluctuating trend with recent upward movement, suggesting potential for continued growth in the near term. The forecast predicts a sustained upward trajectory, reaching $9.99 within the next week. This aligns with the current price hovering near the support level of $8.848, indicating a potential springboard for further gains. Therefore, a long position is recommended for this short-term investment. An optimal entry price would be around $9.30, allowing you to capitalize on the anticipated upward movement while minimizing risk. A stop-loss order should be placed at $9 to protect against unexpected price drops. The target price could be set at $10, aiming to capture the full potential of the predicted price increase. This strategy leverages the bullish sentiment and short-term price forecast for Render, offering a potentially profitable opportunity for investors seeking quick returns. Given the price history and forecast for Solana name service, a medium-term investment strategy appears promising. The price history shows a volatile period with both upward and downward movements, suggesting potential for further price fluctuations. However, the forecast indicates a gradual upward trend over the next week, suggesting a bullish outlook in the medium term. Therefore, a long position on Solana name service is recommended. A suitable entry price would be around $0.330, slightly below the current price, allowing for a small margin of safety. The stop loss should be set at $0.311, the recent support level, to minimize potential losses. The target price can be set at $0.367, the recent high point, aiming to capitalize on the anticipated upward movement. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Based on the provided information for Doge-Coin, a short-term investment strategy appears most suitable. The recent price history shows some volatility, with a slight downward trend in the past 2 weeks. The forecast also suggests a dip in price over the next week, with a slight upward correction towards the end. This indicates a potential opportunity to capitalize on the short-term price fluctuations. Therefore, I recommend a short position on Doge-Coin. An entry price of $0.413, slightly above the recent low and near the support price, would be appropriate. A stop-loss order should be placed at $0.427 to minimize potential losses if the price unexpectedly surges. The target price can be set at $0.394, aligning with the support price and offering a reasonable profit margin based on the forecast. This strategy aims to capture a potential price dip in the short term, leveraging the current market sentiment and price predictions. Based on the provided information for PEPE, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with a recent upward movement. While the forecast suggests a continued upward trajectory, the short-term nature of the forecast and the relatively high resistance price indicate that a quick correction or consolidation is possible. Therefore, a long position is recommended to capitalize on the potential for a short-term price increase. An ideal entry price would be around $0.0000240, aligning with the recent price action and below the forecast peak. A stop-loss order should be placed at $0.0000232 to limit potential losses if the price reverses. The target price could be set at $0.0000263, aiming to capture the potential upside movement towards the resistance level. This strategy allows for a quick entry and exit, maximizing the potential for profit within a short time frame. Based on the provided information about SHIB, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a volatile trend with recent fluctuations around $2.7-$0.0000320. While the forecast suggests a slight upward movement, the price remains relatively close to its recent lows. Considering the potential for further price dips, a short position could be advantageous. An entry price around $0.0000285, near the current price and above the recent lows, allows for capturing potential downward movement. The stop loss should be set at $0.0000297, slightly above the entry price, to limit potential losses. The target price could be set at $0.0000271, aligning with the recent lows and the forecast's potential for a slight dip. This strategy aims to capitalize on the short-term volatility of SHIB while minimizing risk. Based on the provided price information for Doge-Coin, a cautious investment strategy focusing on the short to medium term appears most suitable. The historical price data reveals a fluctuating trend, with recent prices hovering around the lower end of the range. The forecast suggests a slight upward movement in the coming weeks, but the potential for further decline remains. Considering the support price at $2.609, a potential entry point could be around $2.75, allowing for a margin of safety above the support level. The stop loss should be placed at $2.65 to minimize potential losses if the price drops below the support. The target price could be set at $3, aligning with the resistance level and aiming to capture a modest profit. This strategy balances risk and reward by targeting a conservative gain while protecting against significant losses. The short to medium-term timeframe allows for flexibility to adjust the position based on market developments and avoid getting caught in a prolonged downtrend. The price history of Doge-Coin shows a downtrend over the past 2 weeks, with the price falling from $0.00989 to $0.0079. The forecast price also indicates a continued downward trend over the next week, suggesting a bearish outlook for Doge-Coin in the short term. Given this trend, a short position seems to be the most suitable strategy. To implement this strategy, we can enter a short position at the current price of $0.00823. The stop loss should be placed at $0.00835, slightly above the current price, to limit potential losses. The target price can be set at $0.007435, which is the support price and the lowest point in the recent price history. This strategy aims to capitalize on the anticipated price decline and secure profits before the price potentially bounces back from the support level. Based on the provided price information for NEAR protocol, a cautious investment strategy focusing on the short to medium term appears most suitable. The 2-week price change shows a volatile trend with both upward and downward movements. The forecast suggests a slight upward movement in the coming week, but the price remains near its support level, indicating potential for further downside pressure. Given this scenario, a long position could be considered, but with a tight stop loss to mitigate risk. A suitable entry price would be around $6.85, aligning with the recent price action and below the current forecast. The stop loss should be set at $6.66, the recent low, to limit potential losses. The target price could be set at $7.30, aiming to capture the upside potential indicated by the forecast. This strategy allows for potential profits while minimizing risk exposure in case of a further price decline. Given the price trends and forecast for Internet Computer, a moderate investment strategy would focus on a medium-term approach. The historical prices show a recent dip followed by a potential rebound, with the current price hovering near the support level of $11.791. The forecast suggests a gradual increase towards $15, indicating a bullish outlook in the medium term. Therefore, a long position is advisable to capitalize on this potential price increase. An entry price at $12.50 would allow you to buy in at a reasonable price point, while the stop loss should be set at $11.80 to protect against any unexpected price drops. The target price should be set at $14.50, allowing you to take profits before the market potentially reaches its resistance level of $13.691. This strategy balances risk and reward, aiming to capture a portion of the projected price increase over the medium term. Given the price trends and forecast for Injective, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend over the past 2 weeks, and the forecast suggests further consolidation around the current price levels. While there is a possibility of a minor upward movement, the resistance level at $29.17 suggests that significant upside potential is limited in the short term. Therefore, a short position is advisable for a short-term investment strategy. An entry price around $29, close to the current price and resistance level, would allow you to capitalize on potential price declines. A stop loss should be set at $29.50 to protect against unexpected upward movements. The target price could be set at $27.50, aiming to capture a potential decline towards the support level. This strategy leverages the short-term bearish outlook and aims for a quick profit within a week or two. Given the price trends and forecast for BTC, a short-term investment strategy appears to be the most suitable approach. The historical prices show a downward trend over the past 2 weeks, with the forecast predicting further declines. This indicates a bearish outlook in the short term. The support price at $558.30 suggests a potential floor for the price, while the resistance at $601.30 highlights the difficulty in breaking through the current downward momentum. Therefore, a short position on BTC is recommended. An aggressive entry price could be around $590, aligning with the forecast and allowing for a potential profit as the price approaches the support level. To manage risk, a stop loss should be set at $601.30, above the current price and resistance level. This would limit potential losses if the price unexpectedly rises. The target price could be set at $558.30, the support level, aiming to capitalize on the anticipated price decline. The provided historical price data and forecast for THETA network suggest a cautiously optimistic outlook for the short to medium term. While the historical prices show some volatility, they generally trend upwards. The forecast also indicates a positive trajectory, with prices projected to increase over the next week. This suggests that a long position could be a viable strategy. An entry price around $2.68, near the current price and slightly below the resistance level, would allow for potential upside while minimizing immediate risk. A stop loss could be placed at $2.48, below the recent lows and the support price, to protect against significant price drops. A target price of $3.15, aligning with the highest historical price and the forecast projection, would offer a reasonable profit potential. This strategy balances risk and reward, aiming to capitalize on the anticipated upward movement of THETA network in the short to medium term. Given the price trends and forecast for WorldCoin, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a recent decline, with the current price near its support level of $2.836. The forecast suggests WorldCoin may continue to decline in the short term, reaching as low as $3.18 before potentially stabilizing. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $3.30, slightly above the current price, allows for a small buffer. The stop loss should be set at $3.40 to limit potential losses if the price unexpectedly rises. The target price should be $2.90, taking advantage of the forecasted decline while staying above the crucial support level of $2.836. This strategy aims to capitalize on the short-term bearish momentum while minimizing risk through a well-defined stop loss and a conservative target price. Hooked Protocol's recent price history shows fluctuations, with both upward and downward movements. The forecast suggests a downward trend over the next week, indicating a bearish outlook. Considering the support price of $0.521 and the resistance price of $0.5847, it appears that the price is more likely to move downwards than upwards in the short term. Therefore, a short-term investment strategy focusing on a short position seems more appropriate. An aggressive short-term strategy could involve entering a short position at the current price, around $0.542. The stop loss should be set slightly above the current price, at $0.550, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.510, taking advantage of the predicted downward movement and aiming to capture a decent profit before the price potentially reaches the support level. This strategy capitalizes on the bearish outlook suggested by the price forecast and historical data. Artificial Superintelligence Alliance shows a recent price decline, with the forecast suggesting further drops. The historical data indicates some volatility, but the overall trend appears bearish in the short term. Considering the forecast and price support, a short-term bearish strategy seems suitable. An entry price of $1.82, close to the current price and resistance level, would allow for potential profit as the price moves towards the forecast low. To manage risk, a stop-loss order should be placed at $1.85, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be set at $1.69, aligning with the historical low and the lower end of the forecast range, allowing for a reasonable profit margin. This strategy capitalizes on the short-term bearish outlook while incorporating risk management measures to protect against potential upward price movements. Given the price trends and forecast for Polkadot, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a recent consolidation phase, with the price hovering around the $9 mark. While the forecast suggests a slight upward movement, it's not a strong bullish signal. The support price at $8.389 acts as a safety net, indicating potential buying opportunities if the price dips. Conversely, the resistance at $9.997 suggests that significant upward momentum might be limited in the short term. Therefore, a long position is recommended with an entry price around $8.80, slightly above the support level. This allows for potential upside if the forecast proves accurate while minimizing risk if the price dips further. A stop loss should be placed at $8.389, aligning with the support price, to protect against significant losses. The target price can be set at $9.90, aiming to capture a portion of the potential upside while leaving room for further price appreciation. This medium-term strategy allows for a balanced approach, capitalizing on potential upward movement while managing risk effectively. Given the provided price history and forecast for Filecoin, a cautious investment strategy focusing on the short term seems most suitable. While the historical prices show some volatility, the forecast indicates a potential upward movement in the coming week. However, the price is currently near its resistance level, suggesting potential for a pullback. Therefore, a long position could be considered with a conservative approach. An ideal entry price would be around $6.60, slightly below the current resistance level. This allows for some room for price fluctuation before reaching the target price. The stop loss should be set at $6.40, below the recent support level, to minimize potential losses. The target price could be set at $7.20, aligning with the forecast and providing a reasonable profit margin. This strategy allows for capitalizing on a potential upward movement while managing risk through a well-defined stop loss. Based on the provided information about Conflux, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend, with recent dips suggesting potential volatility. The forecast price indicates a slight upward movement in the coming week, but the overall trajectory remains uncertain. Considering the support price at $0.1982 and the resistance price at $0.2188, a conservative approach would involve entering a long position when the price rebounds from the support level. An ideal entry price would be around $0.200, allowing for a buffer below the support price. The stop loss should be placed at $0.198 to minimize potential losses in case of a sudden drop. The target price could be set at $0.220, aiming to capitalize on the potential upward movement predicted in the forecast. This strategy aims to capitalize on a potential rebound while managing risk effectively. Holding the position for a few weeks would allow for a more substantial price appreciation, aligning with the medium-term investment horizon. Based on the provided information about Ethereum name service, a short-term bullish investment strategy appears promising. The historical price data shows a fluctuating trend with an overall upward bias. The forecast price suggests continued growth, reaching up to $50 in the coming weeks. The current price sits comfortably above the support price of $34.53, indicating strong buying pressure. Therefore, I recommend a long position on Ethereum name service. A suitable entry price would be around $41, aligning with the current price and recent historical highs. To manage risk, a stop-loss order could be placed at $39, slightly below the support price. The target price could be set at $46, reflecting the optimistic forecast and aiming for a reasonable profit margin. This strategy capitalizes on the anticipated upward momentum of Ethereum name service while incorporating risk management measures to protect potential losses. Given the price trends and forecast for Avalanche, a medium-term investment strategy appears to be most suitable. The historical prices show a general upward trend, with recent fluctuations around the $50 to $53 range. The forecast suggests continued growth, with prices potentially reaching $58 by the end of the 2-week period. This indicates a bullish outlook in the medium term. Therefore, a long position is recommended. An ideal entry price would be around $51, aligning with the current price and the support level of $44.63. A stop loss should be set at $49 to limit potential downside risk. The target price could be set at $57, aiming to capture a significant portion of the projected price increase while remaining below the resistance level of $53.23. This strategy balances risk and reward, allowing for potential profit from the anticipated upward movement of Avalanche in the medium term. Given the Bitcoin price trends and forecast, a medium-term investment strategy appears suitable. The historical price data shows Bitcoin has been fluctuating within a range, with recent price action suggesting a potential upward movement. The forecast indicates a gradual increase in price over the next week, reaching around $0.0679. However, the resistance level at $0.06002 suggests caution and highlights the need for a measured approach. Therefore, a long position in Bitcoin is recommended for a medium-term investment strategy. A suitable entry price would be around $0.0597, aligning with the current price and allowing for a potential entry point before the forecasted price increase. The stop loss should be placed at $0.0569, slightly below the recent lows, to minimize potential losses. The target price should be set at $0.0679, aligning with the highest forecasted price, allowing for a potential profit of around 14%. This strategy balances risk and reward, aiming to capitalize on the anticipated upward momentum while protecting against potential downside movements. Based on the provided price information for PENDLE, a short-term investment strategy appears most suitable. The historical price data reveals a recent upward trend, with the price fluctuating around the $5.85 to $6.82 range. While the forecast suggests a slight dip in the coming week, the price is expected to remain above the support level of $5.413. Therefore, a long position is recommended for a short-term investment. An ideal entry price would be around $5.92, aligning with the current price and the anticipated dip in the forecast. The stop loss should be set at $5.79, below the recent lows, to limit potential losses. The target price could be set at $6.12, aiming to capitalize on the resistance level and the potential for a slight upward movement in the short term. Given the sandbox price history and forecast, a medium-term investment strategy appears most suitable. While the price has experienced volatility, the recent upward trend and the forecast suggesting further growth indicate potential for profit. A long position is recommended, capitalizing on this potential. The entry price should be set at $0.778, aligning with the current price and providing an opportunity to enter the market before a potential price surge. The stop loss should be placed at $0.735, below the recent dip and acting as a safeguard against unexpected price drops. The target price should be set at $0.889, aligning with the highest forecasted price, allowing for substantial profit potential. This medium-term strategy allows for potential growth while mitigating risk through a well-defined stop loss. Based on the provided historical price data and the forecast for Decentraland, a cautious investment strategy would be suitable. While the forecast indicates a slight upward trend, the price history shows a degree of volatility, with several fluctuations both up and down. Therefore, a long position is recommended, but with a focus on short to medium-term gains. An ideal entry price would be around $0.655, aligning with the recent historical price and the upward trajectory suggested by the forecast. A stop loss should be placed at $0.639, slightly below the recent low point, to protect against potential downward movements. The target price could be set at $0.708, taking advantage of the forecasted peak within the next week. This strategy allows for potential profit while managing risk effectively. Given the price trends and forecast for ENG coin, a medium-term investment strategy appears most suitable. The historical prices show a volatile period, with a recent dip followed by a potential upward trend. While the forecast suggests a continued upward movement, the support and resistance levels indicate a period of consolidation before a potential breakout. This suggests a period of sideways movement with potential for upside. Therefore, a long position is advisable to capitalize on the anticipated upward movement. An entry price around 31 cents could provide a good entry point, aligning with the recent dip and below the current price. A stop loss could be set at 28 cents to protect against a significant price drop. The target price could be set at 36 cents, aiming for a potential upside based on the forecast and resistance level. This strategy allows for a medium-term investment horizon, potentially capturing gains during the anticipated upward movement while managing risk through a well-defined stop loss. Based on the provided information for Uniswap, a short-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a volatile pattern with an upward trend, but the recent price drop suggests potential for a short-term correction. The forecast price indicates a continued upward trajectory, however, reaching a peak before potentially stabilizing. Therefore, an aggressive short-term investment strategy would involve entering a long position at the entry price of $17. The stop loss should be set at $16 to mitigate risk in case of an unexpected price decline. The target price is set at $18.50, aiming to capitalize on the predicted price increase towards the resistance level. This strategy allows for potential profit within a relatively short timeframe while managing risk through a well-defined stop loss. Based on the provided historical price data and the forecast for Chainlink, a bullish investment strategy appears to be the most suitable approach. The historical prices demonstrate a general upward trend, with recent fluctuations hovering around the $24 to $29 price range. The forecast further strengthens this bullish outlook, projecting prices to rise steadily over the next week, reaching potentially $35. Therefore, a long position in Chainlink is recommended. An entry price of $28 could be considered, aligning with the current price range and offering a potential entry point before the anticipated price increase. A stop-loss order at $26 would help mitigate risk, ensuring a predefined point at which the position is closed if the price drops unexpectedly. The target price could be set at $33, capitalizing on the forecast's upward momentum while allowing for some profit-taking before reaching the projected peak. Based on the provided price information for Aave, a medium-term investment strategy appears to be the most promising. The historical price data demonstrates an overall upward trend, with recent fluctuations suggesting consolidation. The forecast predicts continued growth, reaching levels above the current resistance. This suggests a bullish outlook for Aave in the medium term. Therefore, a long position is recommended. An entry price around $360 would allow for capturing the potential upward movement while minimizing the risk of entering at the peak. A stop-loss order placed slightly below the recent support level, around $340, would protect against unexpected downward movements. The target price should be set at approximately $400, aligning with the higher end of the forecast range, allowing for substantial profit potential while remaining within a reasonable timeframe. EOS's 2-week price history shows volatility, with a recent dip followed by a slight recovery. The forecast indicates a potential upward trend over the next week, suggesting a possible buying opportunity. Considering the historical price data and the forecast, a long-term investment strategy with a focus on the medium term seems appropriate. An entry price around $1.1 could be considered, aligning with the current price and the potential for a price increase towards the forecast high of $1.26. A stop-loss below the recent low of $1.04 would protect against significant downside risk. The target price could be set at $1.26, aligning with the highest forecasted price, allowing for potential profits while leaving room for further upward movement. This strategy capitalizes on the potential for a medium-term price increase while managing risk through a well-defined stop-loss. Given the price trends and forecast for Tron, a medium-term investment strategy appears most suitable. The historical price data shows a downward trend over the past 2 weeks, with the forecast indicating further declines. However, the price is currently hovering near its support level of $0.262, suggesting potential for a bounce back. Therefore, a long position is recommended, aiming to capitalize on a potential rebound. An entry price around $0.270, slightly above the current price, allows for some room for price fluctuations. The stop-loss should be set at $0.262, aligning with the support level, to minimize potential losses. The target price can be set at $0.300, aiming to capture a potential upside move towards the resistance level of $0.2971. This strategy allows for a balanced approach, considering both the short-term bearish outlook and the potential for a medium-term recovery. Based on the provided price information for Suncoin, the 2-week price change reveals a somewhat volatile pattern with fluctuations both upwards and downwards. The forecast price suggests a slight upward trend over the next week. Considering this, a medium-term investment strategy with a long position seems appropriate. The entry price should be set at $0.0255, aligning with the recent price action and the forecast. To manage risk, the stop-loss should be placed at $0.0243, slightly below the support price of $0.02434. This allows for some price fluctuation while protecting against significant losses. The target price can be set at $0.0292, representing a potential upside based on the forecast. This strategy aims to capitalize on the anticipated upward momentum while mitigating risk through a well-defined stop-loss and a conservative target price.